Pepe is sitting at the absolute bottom of an 8-month descending channel. Bitcoin just dropped from $82,000 to $60,000 and is trying to find its footing. What happens in the next 48 hours could either launch Pepe 40% higher or send it into a final capitulation nobody wants to see. Let's get into it. This video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research before investing. Before Pepe, a quick Bitcoin read, because it's the entire context for this trade. The week opened with Bitcoin trying to stabilize after one of its most aggressive sell sequences in recent memory. The move from $82,000 down to $60,000 was fast, high volume, and driven by a combination of leveraged long liquidations, macro risk-off positioning, and stop cascades through key levels. $74,000 broke, $70,000 broke, and sellers didn't stop until $61,000. Right now, BTC is attempting a relief bounce in the $61,000 to $63,000 zone. But, and this is the critical point, there is no strong trend reversal signal yet. The market is still in fear mode. It's searching for a floor, not confirming one. Here's the binary that matters for everything we're about to discuss. Above $63,500 to $65,000, the market breathes, altcoins stabilize, and risk appetite begins to return. Below $60,000, a new stop-loss wave triggers, altcoins bleed harder, and the search for the next support level begins in earnest. Keep those two levels in mind. Because for Pepe specifically, Bitcoin's behavior at $60,000 is the single most important variable on the chart. Let me walk you through what this chart is actually showing and why this specific moment matters. Pepe has been inside a descending channel for months. The structure is clean and consistent. Lower highs, lower lows, price contained between two parallel downward sloping trend lines. The upper band has acted as resistance every time price approached it, including a notable rejection in May, when bulls made a genuine attempt to break the trend, got turned away by sellers, and the result was a sharp move back down. That May rejection is important context. It tells you the trend hasn't changed yet. Bulls tried, sellers reasserted control. That's a fact about this chart that you need to respect before getting too excited about any bounce. But here's what's happening right now that makes this worth a serious look. Price has reached the lower band of that channel. And the lower band of a descending channel is not just a random line. It's where the pattern has historically produced its most aggressive counter moves. When an asset reaches the lower boundary of a descending channel, one of two things tends to happen. And the market is about to decide which one. Either buyers show up, defend the level, and produce a sharp relief move back toward the upper band, or the channel breaks to the downside. And when that happens in a meme coin, the drop that follows tends to be fast and deep, because there are few technical reference points below and stop losses cluster just under the channel floor. For Pepe specifically, there's an additional dynamic worth understanding. Meme coins amplify Bitcoin's moves, not linearly, dramatically. A 5% Bitcoin rally can produce a 15% to 30% Pepe move. A 5% Bitcoin drop can produce a 20% to 40% PPA drop. That's not speculation, that's how risk appetite flows in this market. When sentiment turns risk on, meme coins are the first place speculative capital goes. When sentiment turns risk off, they're the first place it leaves. That relationship means Pepe's chart cannot be read in isolation from Bitcoin right now. The two are directly linked, and then we'll work through both scenarios with that in mind. If Pepe holds the lower band of the descending channel, and especially if Bitcoin stabilizes above $63,000 to $65,000, the setup for a significant relief move exists. First target, 0.000033 to 0.000035. This is the initial resistance zone above current price, achievable relatively quickly if buying momentum builds. Second target, 0.000038 to 0.00000042. This requires sustained momentum in a broadly improving market environment. It's the range where prior consolidation areas created overhead supply. If momentum genuinely builds 0.000050 and above, the upper band of the descending channel, getting there would represent the most significant rally Pepe has seen in this entire channel period. The current structure has what I'd describe as a post-capitulation bounce profile. The selling that brought price here was intense. Momentum at the lows has been weaker than earlier in the downtrend, and the lower channel boundary has historically been where Pepe's most aggressive relief moves originated. In a scenario where Bitcoin finds its bottom around $60,000 to $61,000 and begins recovering, Pepe sitting at channel support simultaneously creates a genuine setup. The risk-reward ratio at this specific location is better than it's been at any point in recent months. A 20% to 40% relief move from these levels would not be surprising if the macro cooperates. Now the other side, and with meme coins, the bearish scenario deserves particular attention because the drops are not gradual. If Pepe closes daily candles below the lower channel boundary, the support structure that has been holding this entire pattern breaks. And when that happens, the buyers who were defending the channel become sellers, their stops trigger, and there's very little technical structure below to slow the decline. In that scenario, $0.000025, $0.000022, and potentially wicks below $0.000020 all come into play. These aren't levels with strong historical support. They're areas where price would be in free fall, looking for a new floor. The trigger for this scenario is straightforward. Bitcoin breaks $60,000 on a daily closing basis. If that happens, risk appetite collapses further. Speculative assets get sold aggressively, and Pepe, as a high beta meme coin, absorbs that selling disproportionately. The speed of the move is what makes this scenario particularly dangerous. Meme coin channel breaks don't play out over weeks. They play out over days. If you're watching this and you're exposed, you need to know exactly where your line is before it happens, not after. Here's what I find genuinely compelling about the current picture, and why it's worth discussing rather than ignoring. Pepe is at the bottom of its channel at the exact same moment that Bitcoin is attempting its first relief bounce after a major drop. These two things happening simultaneously creates what I'd describe as a transition zone, a point where the market is deciding between a significant bounce and a final capitulation flush. These setups don't come along constantly. They require a specific combination of technical positioning and macro context. And right now, that combination exists. My read on probability, roughly 60% bounce, 40% final drop. The lean toward the bounce comes from the channel holding historically, the weakening selling momentum, and Bitcoin's positioning at a significant support zone simultaneously. The 40% bear case exists because the trend hasn't broken, Bitcoin's recovery isn't confirmed, and meme coins can and do fail support zones with very little warning.